What's up, guys? What's up, guys? Have you been struggling to learn how to mark out a point of interest? Whenever you get to the chart, you mark out a point of interest and the market easily hit you out, or yeah, this video is meant for you. I want you to watch this video to the end to enable you to know how you can spot a point of interest using a very particular tool called Fibonacci retracement tool. So let's look at, you see that the market has been pushing to the upside, right? The market has been an uptrend. The first thing that you need to know is that the market need to break a structure. The market need to what? Break a structure to the upside this way. The market need to break a structure to the upside this way. So what is the next thing I need to do? You need to discover the origin of every move. You need to discover the origin of every particular move, where the market pushed up before breaking a structure. And how can you see that? Go to a 4 hour time frame, and then you're going to see this thing. You're going to see the very particular move clearly. So you see, this is a USD CHF on 4 hour time frame. So you can see the market pushed off a little from here and had a retracement. From here, the market start pushing to the upside. So what are you going to be doing? When the market now opens, when the market is already selling. So what you have to do is you bring your Fibonacci retracement to from this low, drag it up to the very particular top. And then where is your 78% Fibonacci retracement to? That should be the level you should be looking at. Because one thing about the 61% Fibonacci retracement to, which is this, is that whenever you mark that 61% Fibonacci retracement to, you stand the chance of risking massive. You stand the chance of what? Risking massive. Although most of you might argue with me that I'm going to keep my stop loss this way because this one is 61% level. Some will tell me that they're going to keep their stop loss just below the 61% level. Yes, this tendency is going to play out. I'm not saying it's not going to play out. It's going to play out because the market might do something that look like this. Market might just tap into it and buy massive. Or sometimes the market might want to deep down into the 70% level before pushing to the wall, before pushing to the upside. So you don't want to experience all this kind of thing, and that's the reason why you need to keep your stop loss what this way. And you can see you are now risking massive. You are now what? You are now risking massive. But when we consider the 78% level, that is why when your stop loss will be what? When your stop loss will be a little bit tighter. You see, you need to understand something that the fact that the market bought from the 61% level doesn't mean that there's no time that is going to retrace back to the 78% level. There is a time it's going to do that kind of thing. So just be patient with yourself. Believe me, it is certainly going to come back to the particular zone. So what are we going to be doing now? We're going to be marking the entire 78 watts percent Fibonacci retracement tool, and we will wait for the market to pull down to the particular what, the particular zone to buy. So what are the steps again? The test is that number one is your point of interest must break a structure. The next is that your point of interest will be your 78% Fibonacci retracement to reason because of your stop loss. Let's check out more like NZDZ CHF. Let's check out more like NZDZ CHF to see whether I am talking something that makes sense. So we'll be looking at NZDZ CHF, NZDZ CHF. So you see, is loading. So we're going to be using NZDZ CHF as well to see whether we can spot a valid point of interest. You know, point of interest can still be your demand zone, can still be your what they call it, can still be your supply zone, can still be your what they call it again. Okay, then let me delete all these things here. Okay, let me delete everything here. So your point of interest can still be your demand zone, can still be your supply zone, can still be your order block or whatever. So what can you see now? The market has been massively been on a downtrend market. You see, this is a massive downtrend market. This way, you're gonna see the market is in what? Is in a downtrend market this way. So this is the downtrend, right? And what really happened there, if you understood market structure well, you're going to see that the market broke a structure to the upside. So this is a change of character after the market had been selling for a long time. So what are you to do now? You want to spot your value point of interest. So quickly drag your Fibonacci retracement tool from the low to the top. And then finally, where is your 78% level? This is my 78% wall. This is my 78% level. So I'm going to mark it out and I'm going to be waiting for the market to return back to the particular zone for me to take on a buy. So that is it. So you can see whatever that is happening above or whatever that is happening at the premium zone is none of my business. I'm going to wait for the market to pull down to this less than 8% level so I can buy. I wouldn't be taking this 1% level reason because my zone would be massive, would be big. So I would always acknowledge the 78% levels to go in for my buy. So I'm going to be keeping my entry this way, then keep it this way, and then target to the wall, target to the height of the Fibonacci retracement tool. So quick one, guys. Your If you want to obviously know how to manage a particular thing, number one is that If your point of interest must break a structure, must do what? Must break a structure. Secondly, you plot your fee from the low to the what? To the high. Remember, before you start plotting this thing, the market should be what? Should be selling, so that you can be able to discover the height of that very Fibonacci what? Retracement to, or you can be able to discover the height of that very particular what? Market. So you plot from the low to the high and wait for the market to start. Before you start plotting, number one, the market needs to start selling before you start plotting again. You plot it to the what? You plot it from the low to the what? To the high. Then your 70% level, you mark it out. So that is everything, and that's what the most easiest way for you to know how to spot a valid point of interest. So you see, at the end of the whole day, it's going to look this way, and then we're going to lock all these things, and we're going to be very patient to see how the market will come back to this. Thank you.